Yeah, I think that the things that I would really look at are the competitors in this space and what makes that business differentiated from the competitors. And we talk about this a lot in startups as well. Same thing applies. What is their moat? What is the thing that insulates that business from competitors grabbing it?
Hey everyone, welcome to another episode of Humans of Flippa. So today I'm joined by Katie Dunn, who is an angel investor, a board director, and a finance and due diligence expert. Now I'm really excited to speak with Katie for a couple of reasons. First is that in the online business space, a major area that holds investors back is in due diligence. How do I know I'm buying the right business? And the less experienced you are with due diligence, the more it can feel like throwing a dart at a dartboard and just hoping that it lands on a good business. Now, on the other hand, due diligence can also be more straightforward than some people are making it out to be, because it can hold a lot of people back with the paralysis by analysis. So my hope is that this conversation will give a bit of clarity in that regard as well. Then on the other side, if you're a business owner looking to receive investment or an exit, I think this could be a helpful conversation to understand what are investors or buyers actually looking for in the business or in you as an individual. So on that note, let's get into the show. Katie, thanks for joining us. Welcome to the show.
Thank you so much for having me, Nick. I'm really excited to be here. And thank you for the nice intro.
Absolutely. Well, I know that's just the intro from my perspective. So can you tell me a little bit more about yourself and what you do?
Sure. I'll get into my background a little bit because it's relevant. So I spent 25 years in commercial real estate finance. And what that means is that I was doing loans for buildings. So much like you buy a house and get a mortgage, people do that when they buy commercial real estate as well. And what that really taught me was how to underwrite people, places, and things. And that's where I really got comfortable with due diligence and finance and numbers and modeling and talking about numbers in terms of millions and billions instead of just hundreds and thousands. And then I was always looking for ways to invest my money. I invested in real estate, I invested in stocks, and I even produced a movie at one point. And then I found startups, and that's where I was really hooked. So like you said, my thesis is to invest in underrepresented founders in CPG and tech. And I've got over 25 investments now, which is really fun and exciting. And it's been a great process.
Yeah, as you were saying that, I was wondering, so you started off kind of far away as far as, I guess, verticals go or industries go in kind of the due diligence phase, potentially considering investment phase. And then you mentioned investing in a film, investing in startups. Does the process vary significantly across those different verticals, or is there some significant overlap? I assumed you did take your learnings from your initial experience over to film and startups as well.
Yeah, definitely. I mean, the film was a whole different animal, and I learned a ton there. I became really close friends with the producer and writer and director and producer. So they really walked me through that process. So that was a great learning experience, and probably one I won't do again because I didn't make money from it. And I learned a lot. And I almost feel like, sometimes when you do these things, you learn enough to know that, okay, this is really risky. This is not, this is too risky for my risk level. But when I was doing the real estate deal, so when you're looking at a commercial real estate building, say you're looking at an office building or an industrial building with a bunch of tenants in it, you have to look at all of those individual businesses to make sure that their financial health is good enough to pay the rent so that the building owner can pay the mortgage. So that is what gave me the experience. I looked at so many different types of businesses over my 25-year career that I felt really comfortable getting into and doing research, like knowing how to do the research, knowing where to find out certain information, knowing how to read financial statements and not sleeping on the notes to the financial statements. That's where the really fun stuff is. So those kinds of things, when you're just having that background and that basis, is what set my foundation for any deal I look at, anything I look at.
Yeah. And so you're talking, I guess initially I was thinking we would talk about due diligence, but there's another thing that you're talking about, which is equally as important and equally as top of mind to a lot of buyers, which is how do I decide what businesses to even look at? And then performing the due diligence on those businesses to see of those, which ones are actually good businesses. So what is your kind of, I know you have a thesis now about
Mm-hmm.
how you invest, but it took some time leading up to that to decide I want to invest in startups, specifically startups that help this specific audience and in this specific business, these specific business types. How did you go through that selection, that I guess distillation process?
Mm-hmm. Well, a lot of it was driven in because only women in particular only get 2% of venture capital, less than 2% of venture capital money. People of color, less than 1%. And it really is a huge issue. I mean, women are 50% of the population, but only getting 2% of venture capital money. So that was part of it, initially just trying to help to look at people that are, like you said, have been marginalized in the past. The second thing is the statistics around it. This is not purely altruistic, not purely impact investing, which people like to talk about, not just me being a do-gooder and want to support other women. There are stats and facts out there about the returns on female founders is much higher than men. So that was a big part of it. Like if I'm going to make a bet, I can improve my odds by betting on these kinds of people. And then as it relates to the industries, my first angel investment was in the consumer packaged good world. It's a spirits brand based in Ireland in the beverage space. So I really liked that. I liked having something that I could see and feel and touch and like tell my friends to go buy it, that kind of thing. And then as it relates to tech, as a person, I've always been really passionate about how do you make your life easier? How do you use technology to make better use of your time or save you money or make things more efficient? So that's where that comes from. And what I would say is both of those things, I'm passionate about them. It's really, if you don't have passion for something, you're going to get tired of it. You're going to get bored of it. You're going to get mad about it or frustrated or feel like a burden from the thing that you're looking at or working on. So it's really important to really love it. You don't have to know everything about it. You can learn along the way. And that's something that I've done. And that's what's helpful for me for angel investing. I can write smaller checks and it's not 100%. Everything is, I've bet my whole farm on the one deal. I've spread it out under over 25 deals. And so I've got some diversification of the risk, but I'm also very passionate about every one of them. I absolutely love every deal I've done. So you can't replace that passion. You can't learn the passion. You can become more passionate, but you have to have some excitement to start out with, because that's what's going to get you through the hard times and through the tough times. And you want to be able to push through that and be excited about it.
Yeah, definitely. The previous conversation I had with somebody on this topic was the perspective was you don't have to be passionate about the niche itself, but about the work that you're doing within that niche. So I'm hearing a few different angles as far as what that actually looks like, because the thought being that the experience, the day-to-day experience of running that business is more of, I guess, what you'll need to keep your energy levels up for, and you'll need to be the most patient for. But when you're thinking about this through your lens as an investor, I assume less as an operator,
Mm-hmm.
is it more of the space, or is it just the fact that it's a physical product, or you like the product itself?
Yeah, I mean, it's both. I like the space. So I've done a few investments in the beverage world, and I really like the space. I think it's really interesting. And I'm always, I've always got a some sort of drink with me, whether it's electrolytes or protein or a smoothie or, I love Coca-Cola, for example. Like it's just, or water even. And I think it's fascinating. I live in New York, so I often go into bodegas and you look at the walls, like literally walls of all these drinks brands. And so I just study them to see what is this one doing? What does this branding look like? Is this catching my eye? Like, I just like the whole thing of it, the whole story of it. So that I think is where my passion comes from in that. It's just fun. I find it interesting and fun. And some people might think it's so stupid and boring and water is water or soda is soda. But to me, there's a lot of nuances there.
Well, I personally can relate in the sense of during the pandemic, I found that a lot of my I wasn't expecting to talk about this, but I spent a lot of time in the grocery store because I was like I guess something I was able to do. And I just found myself looking at a lot of the brands and just like seeing, because the products would change over time and new things would come in. And so I think that was unexpectedly something that I kind of nerded out over a bit.
Yeah. Yeah. But that could be applied to any kind of thing, right? I mean, that could be applied to AI businesses, which is the real buzzword of the day, or which, I get a couple AI newsletters because I like to see what new things are coming online and what they're recommending. It's just finding something that you get excited to look at or excited to read about or whatever. I think that can give you some direction on what would be meaningful for you in terms of buying a business or investing in a business.
Awesome. So that is one, I guess, pillar when it comes to decision making for what area to invest in or what area to buy a business in. I guess the other part of that would then come down to, within that space, the due diligence of the options within that space, which is actually the right acquisition for me. So let's get a little bit more into the due diligence side, if that's okay. And maybe from the perspective of, I guess, just knowing that a majority of our audience are buyers for online businesses. Mm-hmm. So maybe can you tell me some of maybe the pillars or the core fundamentals or just kind of the basics that someone maybe just starting out or less experienced should have or should make when they're coming into this space and performing their due diligence on businesses?
Yeah, I think that the things that I would really look at are the competitors in this space and what makes that business differentiated from the competitors, and we talk about this a lot in startups as well. Same thing applies. What is their moat? What is the thing that insulates that business from competitors grabbing it? Is it intellectual property in the form of patents? Or is it some proprietary item or recipe or something? Is it a huge community and email list of people that really love this business that are subscribing to a blog? Or, what is the thing that's going to makes it unique today? And then how can you continue to keep that and maintain that or make it better? So that's one thing. The other is really, and this goes back to my background, is the financials. And that's the understanding what it really takes to run the business and how you can improve them, because you're not usually buying something to just let these businesses and hope they just continue and it's passive and it just keeps going. You're going to buy this to create efficiencies and to improve the cash flow and make it more valuable than it already is. So being able to look at the metrics that are important for that industry and that business itself and comparing it to what other businesses in the market are doing. And it might be, if you bought an online, direct to consumer retail business, for example, you'd want to understand what the average order value is. You'd want to understand what the customer return rate is and how many people are coming back and buying it. What are the subscriptions that they have? Those kinds of things. So understanding this stuff and frankly, Google and ChatGPT and some of the AI platforms, they can really help you with this, like what you should be looking at and understanding and then comparing to other things. So it's knowing what those things are today and how you can improve them, why you can make it better, more lucrative for you. That should be the goal. It should really be about the revenue and the money and that's generated.
Yeah, got it. So, and I guess to mistakes that buyers typically make during due diligence and how they can be avoided is, would you say it's just not doing any of those things, or are there actions that people have taken where they think they are buying a good business that they otherwise are not?
Yeah, I mean, it's definitely those two things. Another thing that I think people do is they get really emotional about it, and you have to take emotion out. You might be
Yeah.
just so in love with the product or the business that it clouds your judgment, and you could agree to things that maybe you shouldn't have that might come back to bite you later, uh, or or you could, if you get too emotional on the other side and maybe not buy the business because you are, it's not the negotiation isn't going well or something like that. It's, you have to take emotion out of it and look at the business terms and the business deal for itself. And that can be really hard to do. I mean, I'm a very gut driven person, and emotionally, I look for emotional connection to things that I am investing in. I use my gut to determine if I like a founder that I'm going to invest in or like the product. So it's really hard for me to do that as a person too. And you can get distracted by the shiny objects, whether it's an award or some sort of milestone or press mention or something that when you actually look at it, that's not the end all be all. The shiny thing is not really what matters. It's the core of the operations. It's the financials. It's the moat. So taking the emotion out of it is probably the big thing.
Yeah. And that's interesting because we did our initial conversation was about the passion, the interest, and
Mm-hmm.
more of the emotional side of it. And it does seem like there are two hats to wear at two distinct points. And I guess maybe the takeaway from this then is to have the financials, the objective parts defined before approaching a business or looking at a business, just so that you know what those stakes are before you
Yep.
let the emotion come into it. Is that kind of how you'd go about it?
100%. That is, yeah, exactly. Like I have a list of when I'm looking at an investment, I get a lot of DMs in my LinkedIn, for example, or people reaching out to me saying, I'd love for you to look at this as an investment opportunity. I have a list of questions that I go down, and I want them all to be no. Because if I look for their yes or no questions, does the founder meet my thesis? Does the industry meet my thesis? What is the check size? Like they're yes or no questions. And then I keep going down until I should say I'm looking for, if all of the questions are yes, then I have to take the call. And if any of the questions are no, then I don't take the call. And I've got that reason that I can give that person. A lot of times it's not them, it's me, but I have to have a set of criteria. Otherwise I'd say yes to everything. And then I wouldn't have any money to invest in the first place.
Right.
So yes, absolutely. And it's coming up with that list can be tough. I'm always revising it and always looking at it. But it's the first step. It's the first checklist in the due diligence process. Do these things meet all this criteria first?
Yeah, absolutely. So it's a little bit of almost like combating against yourself to
Mhm.
to disqualify or qualify things. I can imagine that it works the other way around, where a lot of buyers might not know if they're actually buying a good deal, especially when the valuation is higher, and maybe even everything else shows yes, but they're just still unwilling to actually take action and move forward. I don't know if that's a less common thing than just jumping straight in and regretting your purchase, but I imagine having this list works for both ways.
Yeah.
Yeah, knowing to take or not take.
But I think you have to put an offer. If everything else fits and it's that final value or the deal structure or something, you've got to shoot your shot, because you never know. I mean, there's been more than a couple deals in my life that I've done, even buying a house. And, I made an offer of what I could afford at the time, and the people accepted it. And I didn't think there was any way, but I shot my shot and I got it. So it's you have to ask the question and see it, but you have to have your limits set. So it's the, I really like this, but, or get creative with the deal structure. If you're buying a business, whether it's asking for seller financing or, getting debt. I mean, I think we might talk about that too, but, different ways to structure the deal that make more sense for you and hit your criteria.
Yeah. Yeah, absolutely. I do like that we're getting a bit more tactical. I appreciate the suggestion about having the list. Now let's get into the investing side on the buyer's side. So for those who, okay, so yes, we were talking about bootstrapping versus leveraging. So that's one maybe objective, straightforward question I would want to ask. What's your advice? Do you think somebody should be buying a smaller business bootstrapped, or to use leverage and financing in order to acquire a larger business?
Yeah, that's a good question. As a former recovering banker, I love leverage. That's what I did for 25 years. I saw the power of debt and what that can do for you in buying an investment and taking on an investment. That's how, 99% of real estate deals are bought with debt. And I think it depends on your risk level too, because if you get debt, I mean, that is debt that you have, it's something you have to pay back. So you need to make sure that the operations will pull off enough revenue that will allow you to service the debt or pay your monthly payments, as well as give you enough of a return that you're looking for. I'm probably a little more conservative. If it's somebody's first time buying a business and they can buy it all cash and that works for them, I would probably say that rather than jumping into something much bigger that they maybe don't have enough experience with or as much experience with, and using debt to do it. The goal is not to put the business into a situation where you're over levered or you've put so much burden on it, you're never going to be able to do anything with it and get yourself out. So it's understanding the math there. And I think there's always a couple scenarios on your spreadsheet that show, if I put this leverage on it and bought it for this, what does that look like? And then, doing this scenario and this scenario, that's what I would do when underwriting real estate deals. Is I'd have to show to my investment committee, this is the worst case scenario, this is the best case scenario, and this is where I really think it's going to be, and show, prove to them. And that's how I look at it for myself too. I'm my own investment committee, but I apply the same logic. Is this going to, what's the best case? What's the worst case? What's the reasonable? And then look at it often to make sure that it's within what you want to be, the risk level that you want to be at.
Yeah. One perspective that I heard recently is buying a smaller business can actually be more risky, or maybe I should say it's not always less risky to buy a smaller business because it's potentially a younger business or less established, or you have less cushion in terms of revenue and profit to I guess throw out problems. Do you have a certain size of business that you look at for that reason? Is that kind of not part of your list?
I think it depends on the person, because I would look at the smaller business and say, well, this has a lot more growth potential. And if I've got expertise in marketing, for example, that I really think I can apply to make this business grow faster, and then I could then go flip it in 2 or 3 years at a even higher price, great. That's true. If you are buying a larger business and you don't want to be the day-to-day operator, so you're buying the business with the operator staying in place, for example, and you're just looking at this as an investment with cash flow that'll come off on an annual basis, that's great. I mean, I think there's so many factors. It's personal factors. How involved are you going to be? What's your expertise? What is your goal? And you have to start with that. What are my ultimate goals with this? Do I want to sell it? Do I want to own it forever? How is this going to affect me and my lifestyle and my family? So thinking about those things, I don't want this to paralyze somebody or paralyze people. It's just meant to be a framework of, okay, these are important decisions I have to think about before I enter into this huge purchase and potentially change my life.
Yeah.
So what are you going to get out of it?
Yeah. And I know another reason for people to not move forward is the question, do I have the skill set necessary to acquire this business, and do I need the skill set to acquire any online business, I guess? What's your thought? Because I know a little bit earlier you mentioned that maybe you don't know everything about the business, but you're passionate about it and you're willing to learn those things. How experienced do you think somebody should be when determining if they should acquire that specific kind of business?
I think you should know something, because going into it blind is going to be really hard.
That's fair.
But the other thing I would really encourage people is to lean on your network and find a network of people that you can go to, and even consider forming a board of advisors when you purchase the business, and make sure they have different skill sets than you and each other. For example, I was looking at a company recently, and all of the people were marketing. Every single one, their background was marketing. And I was like, this is a terrible board, because everyone's going to say the same thing and they're all going to agree with each other. There's no diversity of opinion or experience. And that's the worst thing you can do for a business. So consider looking at your friends or people you've worked with in the past, or people that, have done that, been there, done that before, and creating that board of advisors that has marketing experience, operational experience, finance experience, whatever it might be, you can get together on a quarterly basis and share with them the results, what's going on, what you're thinking, and then get their expert opinions. So the network can be really helpful. And then the other thing is this is very true in the startup world, there's fractional help out there, fractional C-suite people, fractional CFOs, marketing, operations. Consider networking with those people and bringing them on board to help you with the weaknesses and the areas where you need help. And when you're working with them, make sure they're teaching you along the way as well. And whether it's recording the information, logging the information that they're providing, or putting together playbooks, things like that you can really leverage in the growth of the business. But don't expect them to just do it and you're shut down from it. As the business owner, you need to have your hand in every piece of the pie, but and understand it as much as you can. And then all the while delegating to the experts.
Yeah. And what level of business do you think that becomes a consideration to hire even fractional C-suite players? Is that more of like an 7-8 figure valuation or higher?
I think that would be 7 or 8. But if you are, there are very affordable people out there. Even thinking about, there are virtual assistants, for example, that in the Philippines, my company in the past has used these virtual assistants in the Philippines that have incredible knowledge on marketing. And they were able to produce blogs and to help with email flow and sales tracking and things like that, it wasn't our forte. It wasn't what, we didn't have the bandwidth to create all these things. So we're out doing 100 other things. So thinking about leveraging talent from other places could be really great too, because their rates are, $15 an hour, and on a part-time basis, that can be really affordable and help you grow. So not being afraid to be resourceful, as you should in your due diligence, figuring out who those people would be and be able to fit into the slots that you need up front.
Yeah. And I think that's a good point. And maybe something I think is worth considering is hiring at that lower level, even probably prepares you for the event of hiring those C-suite level players, because you already have that experience now and I guess have learned the mistakes less at a less expensive level, probably.
Yep.
Yeah, so that's probably a good thought, a good idea to start hiring and just kind of experiencing the delegation process as early as possible.
Yeah. And with that, I'll plug one of my favorite books, which is Dan Martell's Buy Back Your Time. He has incredible resources for how to go about doing that and creating playbooks and recording yourself doing certain tasks that they can then repeat and then, make them translate that into a policies and procedure. And then you read it and make sure, oh, they actually understand this. So there's a lot of good tactics in there, those especially that I think are really helpful for creating the foundations of any business, frankly.
Yeah, that's so funny. The last person I spoke to recommended that book as well. And I just
Really?
started listening to it yesterday. Yeah.
Oh, you're going to love it.
Yeah. Okay, awesome. So let's go now towards the owners and the business owners and the potential sellers. So I know your expertise is in helping, or one of your multiple expertise is in helping business owners to get funding. Now that's a little bit different from an exit because you still want to continue with your business. But is there some overlap in terms of what you would recommend to business owners who either want to receive investment funding or to exit altogether?
Well, as it relates to raising equity, and that's a very different thing than getting debt to buy a business, finding investors and getting investors. I tell everyone this, and I think you already know this, Nick, but I think everybody should bootstrap as long as they can because it's keeping the business for yourself. You're the one working on it. And also, the main reason to take on investment is to move faster. And you have to know exactly where that money is going to go and what return it's going to give you. So every single dollar, I see this a lot, and people just say, oh, I'm raising $500,000. Okay, what are you going to do with it? Well, I don't know exactly how I'm going to spend it yet. So then why are you raising the money? If you don't know where you're going to spend it, don't raise it.
Yeah.
So, and then as it relates to looking at an exit, I think preparing either for a fundraise or for an exit are very similar processes in that you need to create a pitch, you need to create a deck, you need to create a data room. And it's really what the story is that you're telling is going to be a little bit different if you're raising money and inviting investors into this investment opportunity versus selling a business where you're giving the buyer an opportunity to take your business to a different level. And then the data room is probably going to have a lot of similar things, from organizational documents to the historical financials of the business to the information on what products you have and what the business is, marketing documents, branding documents, the intellectual property and patents and trademarks and all that good stuff. So the bases are the same. It's just the story's going to be told in a little bit different way. And the data room might include a couple different things. That's what I would say.
Yeah, I think that's really great advice because one thing that I often say in response to business owners who are wondering when is the right time to prepare for the sale is that even if you don't want to sell your business exactly in this moment, that by you creating a business that is enjoyable for somebody to own, that is making the business more enjoyable more likely to be acquired, but also you are creating a business that you're more likely to enjoy while you have it. So if somebody is starting out early on in the building phase of their business, what are some things that you would say you would like to see them do to kind of meet that stage where you think you're looking at somebody's business who would be an attractive investment or an attractive acquisition altogether?
I think that being really organized with the foundation of the business from the start is key. How you set up the business, if it's an LLC or a Delaware C Corp, that can really affect certain investment strategies or things down the line. So being intentional about that and being organized with your financials, being organized with documenting what you did when. And even if it's just you, I'd suggest preparing a quarterly report for yourself. It will show you what traction you've made, what things you've done. It'll show you progress. It'll give you take the opportunity in that to set goals for the next quarter or the next year, and like have that report and put all those reports into a folder, because it'll show the progress of the company for the next person that comes along, and be able to say, like, I tried this and it didn't work. I think it was because of that. Or I tried this and it worked so well. We're going to do this now for the rest of our lives. Or we developed this new product. We found people didn't really love it, so we scrapped that. Like, being able to show those things to a prospective buyer or an investor that you've done research, or you tried certain things, or you figured out what worked or what didn't and how. I think there'll be really the thoughtfulness and the intentionality behind that will be really powerful in showing in the due diligence process for them. And I love the exercise of tracking your own progress, because you're so in the day-to-day all the time. You have to be able to pull yourself out. And it's really hard to do as a solo entrepreneur or a small business, because you're just in the day-to-day and in the weeds. But taking a second to take a step back and say, okay, these are the goals that we've set. This is what we met. This is what we didn't meet. This is what's next. It forces you to take a step back and say, oh, okay, this is what's next. This is how I get there. I've got a plan. And executing on a plan is so much easier than just going, licking your finger and pointing up and see which way the wind is blowing, right? So that's one thing that I would really create that foundation, create that rigor around checking in with yourself and the business is important.
Yeah. As you were saying this, it was sounding a bit like a business diary almost, or I don't know, just a journal. And I think that's a great idea, because as you said, it's so easy to get lost in what you're doing. Mm-hmm. And you might look back at your business diary and realize, wow, I've actually done a lot of things. I'm doing as much as I objectively would expect, or if somebody were to look at this, would think that I'm doing the right things. So I think it kind of helps you to, I don't know, like to quell that voice of criticism if that ever comes up, or uncertainty as mm-hmm. you're building a business or growing a business or preparing it for a potential exit. Yeah, I think that's awesome advice.
I have one other thing one little tip that I'll give, that I actually learned this when I was in corporate. I worked for PwC in consulting for a very short time. I was a horrible consultant, for the record. I didn't like telling people what to do and then they wouldn't do it. It was very frustrating for me. So I wanted to execute on all this stuff that I'd come up with. But anyway, I digress. As a part of the HR there, if you got emails from clients or emails from managers or just people saying thank you, or you did a good job, or this was a great result, anything that was positive, you would put it into a file. You had to put it into an HR folder. And I do this now, even though I'm out of corporate and, as an investor and advisor. Anytime somebody sends me an email saying, thank you so much, this helped so much, or your advice was invaluable, or I got, your work in helping me, my pitch earned me X dollars, I got the check for this. Any positive thing, I screenshot it and I put it in a folder in my photos, and I can just scroll through it on bad days. And it just makes you feel like, okay, what I'm doing, I'm on the right track. I'm okay. This is, even though I had a bad day today, my overall, it's a positive thing. So yeah, I like that. It helps motivate.
Yeah, that is so awesome. I did that. One memory of me doing this was I had an e-commerce business, and it ended up breaking even. So it wasn't a huge success, obviously.
That's pretty good though.
But it was an an Amazon FBA business, and you know how you can select if it's a gift and write a note to that person.
Yeah.
So this, I was just kind of scrolling through, and you on the back end you can see what those notes are,
Yep.
and it was a mom and a dad writing to their daughter who was in college and just saying like hey, keep going. And it was like kind of a motivational product a bit. It wasn't
Uh-huh.
even meaning to be, but that was the screenshot, and that was when I realized, yeah, this was worth it for sure, despite breaking
Oh,
even. Yeah, so I
I
think
love
it's
that, Nick. That's super cool. Yeah. And you're going to take that with you forever. And that's going to make you feel good about the business, no matter what the result was. It
that your
was
investment
meaningful
of
for
time
them.
was worth it. Yeah,
Yeah.
yeah,
Yeah. I love it.
nice. Well, I think as we're kind of going into the personal zone now, I'll ask the personal question, which is, what's something you would have told yourself or wish you knew 10 years ago? And I'm pulling this from our Exit podcast. I think that's a great question, and you're the first person that I'm asking this.
Oh, that's fun. This is a great question. And it's probably not that unique of an answer because I think a lot of people say it, but I really, really mean it. And that I think is the difference in that if you really want to do something or try something, you can do it. If you don't have to be stuck in, so 10 years ago for me, I was in the corporate world. It was really hard. It was really stressful. It was really busy. And I knew I didn't feel aligned in my purpose between my work and who I thought I was or wanted to be. Or I should say who I wanted to be. And so it took me another probably 4 years, I would say. I've been kind of dabbling and doing the stuff I've been doing now for 6 years. So it took me a few more years to get to where I wanted to be. And what I didn't do back then, and the way I got to do what I'm doing now, was through joining communities and putting myself out there to learn. I took Yale Women on Boards executive program. I joined some women executive communities, and I forced myself. I took an angel investing class. I put myself out there in an uncomfortable way to try something new. I thought I would like these things. So I went out and figured out how to try them with a very low barrier to entry because I still had my corporate job and I was able to do this stuff on the side and figure out if I liked it. And I did. So that's what I would say is like, figure out a low barrier way to try something new and see if you like it. And there's so many communities now out there. There's so many educators out there, even YouTube. There's so many ways to learn. So don't be afraid to go out and learn something that you think you might be interested in. You might learn and be like, I hate this. This is not for me. That's great. At least you check that off the box and move on to the next thing.
Yeah, yeah, that's great advice, and I can definitely see or imagine the benefit that a lot of founders or people I know you help with kind of guiding people through their own process, and I'm kind of seeing that right now as you're talking about this.
Yeah.
Awesome. Well, on that note, what is the best way for people to get into contact with you or to work with you?
I think that the best way is to reach out to me on LinkedIn. I am very active there. I post 5 to 6 days a week, and I personally answer all the DMs. It's very overwhelming, but I do. I feel like that's important because people ask me certain questions, and I try and help everybody as much as I can. And I want to do that in my own voice and be real about it. So it's, that I do all my own posts and do all my own DMs.
Awesome. Well, I'll be sure to leave your LinkedIn if you'd like me to, of course,
Yes, for
in
sure.
the show
Please.
notes. Okay.
Yeah,
Sure.
that'd be great.
Awesome. Well, Katie, thank you so much for joining us. I really appreciated our conversation and just you taking the time to share your experience with our audience.
I have loved the conversation, Nick. It's been really great, and I think Flippa is such an amazing platform, and there's a resource out there for people that want to sell their business or buy a business and find exactly what they want. So you did not ask me to plug, but I will plug because I think it's super cool. And I've recommended it to so many. I literally recommended it to somebody this week, in fact. So it's the more that people can be happy in their work, the better, right?
Yeah. Oh, well, thank you for that. And thank you to everyone out there for joining us on this episode of Humans of Flippa. And we'll see you on the next episode.